Hello everyone, welcome back to the new session on rapid revision batch on your paper number 3 advanced auditing and professional ethics for the May 22 and November 22 students and onwards. So as you all know that up to the previous session we have already done up to section number 139 May we have already covered the appointment of an auditor, the rotation of an auditor, casual vacancy in the office of an auditor. And in section number 140, we have understood RR section, that is the removal and resignation section, right? So now today we are going to understand a very important section that is called section number 141. I think after CARO 2020, that is section number 143 subsection 11, the most important section in your company audit is this section. The name of the section is eligibility, qualification and disqualifications of an auditor. Now, when we talk about the section number 141, I would like to tell you that the section number 141 is further classified into three subsections. Subsection 1 and subsection 2 talks about the qualification of an auditor, and subsection 3 talks about the disqualification of an auditor. So subsection 1 and subsection 2 talks about qualification and subsection 3 talks about disqualification. But before that, we have to understand who is eligible to be the auditor. When we talk about the person called auditor, the first thing which comes to our mind is a chartered accountant holding a valid certificate of practice. You all know that after getting qualified, you will be having the two options. Either you can go for an employment or you can opt for a practice. When you are opting it from a practice, as you can say that in my name also I have written FCA Rohit Grover. Now what does the FCA stands for? FCA stands for Fellow Chartered Accountant. Now, what do you mean by fellow chartered accountant? Fellow chartered accountant means that I am into the practice for more than 5 years. So when you continuously hold your certificate of practice for more than 5 years, and when you practice in the field of auditing and accounting, you will be turning from associate chartered accountant to a fellow chartered accountant. But to be an auditor, it is very much necessary that you have to be a chartered accountant holding a valid certificate of practice. But there are some audits, there are some audit branches, there are some audit fields in which COP is not necessary. Say for example, if we'll talk about internal audit under section number 138, if you want to become the internal auditor of the company, you can be a CA without holding COP as well. But if you are a statutory auditor of the company, you have to be a chartered accountant holding a valid certificate of practice. That is the eligibility to become an auditor of a particular company. Now, the next thing which we have to understand is known as qualifications of an auditor. So when we talk about the section number 141, it is further classified into two parts. One is qualification and one is what? Disqualifications. When we talk about the qualifications, section number 141 subsection 1 and section number 141 subsection 2 talks about what? Qualifications, right? And 141 subsection 3 talks about what? Disqualification. If you remember, while taking the appointment also on our letterhead, we have to give the written declaration where I am saying that I am not disqualified under section 141 subsection 3. If you want, you can refer to the previous lecture where we have done that, right? Now, section number 141 subsection 1 and section number 141 subsection 2, which talks about the qualification. So let's have a look on the qualification. When we talk about the qualification, there are two types of qualifications, everyone. Section number 141 subsection 1 talks about the qualification of a sole proprietorship auditor, and section number 141 subsection 2 talks about the qualification of the firm of auditors if you are a partnership firm or LLP. If you are a sole proprietor, what is your qualification? Qualification is very simple, everyone. You need to be a practicing chartered accountant. That's it. If you are a practicing chartered accountant having your sole proprietorship, you are eligible to be the auditor of any company. But if you are a firm of auditors, it means if you're a firm of practicing CAs, then in that case, you need to qualify on the following grounds. What are the grounds you need to qualify? Let's say, for example, first let us talk about partnership firm. In the partnership firm of chartered accountants, it is a very much important rule that the majority of the partners must be practicing in India. Means what? Out of your total partners who are practicing, out of them majority must be practicing in India. That is a rule number 1. That is a qualification number 1. Qualification number 2, there is no limit, there is no upper limit when it comes to the CA practicing partnership firm. Same is the case with the LLP. So whatever the rules I'm telling you right now, it is applicable to both partnership firm as well as what? LLP. So there's no upper limit on the number of partners. Next important thing which you have to understand that there is no problem if a practicing CA enters a partnership with a non-practicing CA. That's a very big myth in the minds of the student that practicing CA can only enter a partnership with another practicing CA. Not only non-practicing CA and practicing CA, the major difference between both of them is the signing authority. The practicing CA has a signing authority to sign an audit report, but the same authority is not available to the non-practicing CA. So you have to understand the fact that audit practicing CA can also do, audit non-practicing CA can also do. But who can sign the audit report? Only and only practicing CA. Non-practicing CA is not allowed to sign the audit report. Clear? Next point. Not only that, nowadays we can have a multidisciplinary partnership firms also. Sir, what do you mean by multidisciplinary partnership firm? Suppose I'm a CA, I can enter a partnership with the CS, with the CMA, with the LLB, with the Bachelor of Engineering, Bachelor of Technology, Actuarial Scientist, MBA, Bachelor of Architecture. Any person. It means any other professional from the other recognized professional body with whom the ICA is having a treaty which is recognized by the central government in India. With those professionals also we can have a partnership firm. So we can have a multidisciplinary partnership firms also are qualified to be an auditor in India. Like say for example, I am a practicing CA, I can have a partnership with another practicing CS or a practicing CMA or LLB. And most important thing, you will understand that when we talk about the practice, in the practice, there are only two professions which can be practiced together. Generally, if you are a practicing CA, you cannot hold the COP in CS or CMA. But when it comes to the practicing LLB, if you are a practicing lawyer, you can be a practicing chartered accountant also along with that. So if you're a practicing CA, you can also practice in your LLB. You can be a practicing lawyer as well. Condition, you should have taken the permission of Bar Council of India as well as the ICA. So you are allowed to practice these two professions together. What are the two professions which can be practiced together? Practicing CA as well as practicing LLB. But if you want to enter into a partnership with the CIMA, means foreign professionals, ACCA, CPA, you are not allowed to have a foreign professional partnership with you. You cannot have a partnership with the foreign professionals. Where we are going to understand, we will understand about that in our clause number 4, schedule number 1, para number 1 or part number 1 of CA Act 1949 in our Code of Ethics, Professional Ethics. So foreign professionals के साथ you cannot have a partnership firm, but with these professionals you can have a partnership firm. 53A, 53B list में these people and these professional bodies are listed. That you will understand after the company audit. Immediately we'll be starting with the professional ethics. There will be understanding. So what are the 4 features? Qualification: majority of the partners must be practicing in India. There's no limit on the maximum number of partners. You can enter a partnership with a non-practicing CSL, and nowadays you can have a multidisciplinary partnership firm with those professionals who are listed in section who are listed in regulation number 53A in the Code of Ethics, Professional Ethics chapter. There we will understand, but you cannot enter a partnership with the foreign professional. This is called your qualification to be a practicing firm of chartered accountants in India as a partnership firm. All these rules which we have understood in the partnership firm are equally applicable to the LLP as well. In the LLP, there are some extra rules you have to understand. First of all, it must be an Indian LLP. You cannot be a foreign LLP coming to India and start practicing in India. No, you cannot be qualified as an auditor if you're a foreign LLP. You have to incorporate a new Indian LLP in India, then only you are eligible. Now, let's say, for example, Deloitte is able to do the audit in India because it is Deloitte India LLP. Are you getting the point? So it has to be a Indian LLP. Next point. Only individuals are allowed to be the partner in case of LLPs. Only individuals. Means another entity cannot become the part of LLP. Only individuals are allowed. And whether you are a sole proprietor, LLP or partnership firm of practicing CS, you all have to register with whom? ICA, and ICA allots you one firm registration number which you have to quote whenever you are signing the audit reports along with the UDIN. So these are the qualifications under section 141 subsection 1 and 141 subsection 2, qualification of a sole proprietor auditor and qualification of the firm of auditors. Is it crystal clear, everyone? Yes. Now the most important part, from where I think hundreds and thousands of questions can be drafted, that part is known as disqualifications of an auditor. Now we are going to understand some 11 different types of disqualifications, in which I'll be throwing some light on those particular areas where most of the students fail to answer that in the examination. So first, let us start with a very simple disqualification. The first disqualification is a body corporate or a company except what LLP. In India, if you want to practicing as a CA, or if you want to be qualified as a CA, or if you want to be qualified as an auditor in India, either you can practice in the sole proprietorship firm, LLP firm, or partnership firm. These are the three things which are allowed. Body corporate of a practicing CAs and a company of a practicing CAs are not allowed. Why the word except LLP is written? Because LLP is a part of definition of body corporate. That's the reason LLP is exempted from that disqualification, because you are allowed or you are qualified to be an LLP in India. So what is the first disqualification? You are not allowed to be a body corporate or a company of chartered accountants. You cannot open a company of chartered accountants like in the form of limited or private limited company, or you cannot be a body corporate of chartered accountants. Next point, you are not allowed to be the officer or employee of the company in which you are an auditor. The company's engagement, when you get engaged as a statutory auditor in one company, you are not allowed to hold any officer designation or employee designation in that company. Not only in that company, in its holding company also, in its associate company also, in its subsidiary company also, and another subsidiary of the common parent also. In all these group of companies, if you are holding any officer or employee designation, suppose you are an auditor in this company and you are holding an employee or officer designation in its holding company, then also you are disqualified. Not only you, your partner and your firm, whole firm will be disqualified. You are disqualified if you are holding that position in associate company, in a subsidiary company, or another subsidiary of the common parent. Now the biggest question arises, sir, employee definition we know. Employee means you are under an employment contract. But sir, what do you mean by officer? Officer means manager. Officers means KMPs. Officer means director. Officer means shadow director. Sir, what do you mean by KMPs? KMP means MD, CEO, CFO, whole-time director, company secretary. If you are holding any of these designations, or if you are holding any employment with the company in its holding or in its subsidiary, in its associate or another subsidiary of the common parent, you, your partner and your firm will be immediately disqualified to be the auditor. Vacation will take place. You have to vacate the office immediately, and section number 139 subsection 8 casual vacancy will arise, because one of the reason of the casual vacancy is also a disqualification. So first one, you are not allowed to be a body corporate or a company except LLP. Second thing, you are not allowed to be holding any officer or employee position in the company and in its group. What is employee? That you already know. And what do you mean by officer? That I have explained. This is the definition of officer. Next point. Sir, in the second disqualification, you are getting disqualified because you are going to be an employee or you are going to be what? Officer in the company. But in the third disqualification, you are not allowed to be under the employment or in partnership with officer or employee of the company and its group. In the second one, you were becoming the officer and employee and you were getting disqualified. But in the third one, you are not directly the officer and employee. You are in employment with or in partnership with officer or employee of the company. So let me give you one explanation here. Say for example, A and B Co, a chartered accountancy partnership firm, is an auditor of XYZ Limited. In the XYZ Limited, Mr. Q is there, who is the MD of this company. Now, being the MD of this company, Mr. A of the ABC and Co is in partnership with this MD of the company. So A is not officer and employee in the company. A is in partnership with the officer and employee of the company with Mr. Q. Now also A is disqualified, B is disqualified, the whole firm is also what? Disqualified. So you are not only going to be an officer and employee, you are also not allowed to be in partnership with or be in employment with officer and employee of the company. And the rule does not only apply to company, here also the rule applies to the company, its holding, its subsidiary, its associate, and another subsidiary from the common parent. Are you getting the point? Remaining examples are given below. You can attach this example with the above provision and you will come to know that why I have used the word called disqualified here. So interpretation, what does the interpretation says that if you are in partnership with or you are under an employment with whom? With the officer or employee of the company, not only the company, it's holding, associate, subsidiary or another subsidiary, you, your firm, your partner will be immediately disqualified. So total 3 disqualifications we have understood. The next disqualification is very important disqualification, that is called indebtedness to the company for goods and services for more than what? 5 lakhs. If you are at any point of time for any period of time, again repeating, try to understand my language. If you or your partner or your firm is indebted to your client or its holding company or its subsidiary company or its associate company or another subsidiary of the same common parent for any period of time, even for a single second, if you are being shown in the debtors, if you are shown in the books of accounts as a debtor, indebted to your client for more than 5 lakh rupees, not greater than equals to 5 lakh rupees, the biggest dumping area where the students fail to answer this examination, they do not understand the differentiation between more than and more than equals to. Here exactly 5 lakhs of indebtedness is not going to disqualify you, but if it is 5 lakh 1 rupee, you will be immediately disqualified. Even for a single moment you have come under as an indebted to your client for more than 5 lakh rupees for goods and services of your client. So let's say for example, I bought one flat. In my flat 8 air conditioners are required and one of my client is the manufacturer of air conditioner. So suppose I am supposed to get 8 lakhs of audit fees from my client and one air conditioner which is costing me in the market is also 8 lakhs. So I told to my client that why should I give the business to any outsider? Let me give the business to you. So I bought the 8 air conditioners from my client only, client company only. And I told him that don't give me the audit fees. We will adjust it. We'll set off it. I'm not asking any favor from my client. I'm not asking any discount from my client. Same market price which is affecting me. Suppose 1 lakh rupee per AC is the price which I have to pay in the market. Same price I'm asking for my client. So my client is ready to set off that. But what is the date today? The date today is 16th March. What is the date today? 16th March. But my audit will start in the month of April or May for the financial year 21-22. From the date of 16 March till 31st March, I'll be shown in the books of accounts of my client as a what? Indebted debtor for 8 lakh rupees. But when my audit will start, they will do the journal entry. Audit fees account debited to debtor 8 lakh rupees. They will pass the adjustment entry after the audit starts because audit not yet started. So for these 15 days, I have been shown as a debtor in my client's books for 8 lakh rupees. Even though after 15 days on 1st April, when I'll start doing the audit, they will do the set off. But that is going to happen in the April. Till 31st March, I will be shown as a debtor for a single second also. If you come in the books of accounts, for how many lakhs I have been shown as a debtor? For more than 8 lakhs. And I'll be immediately disqualified if my indebtedness towards my client for the goods and services is more than what? 5 lakhs. Are you understanding my point or not? Yes. So exactly 5 lakhs, you are not disqualified. More than 5 lakhs, you are immediately disqualified. But at the same point of time, what the law is saying, sir, getting the advance audit fees and getting the progressive audit fees does not disqualify you. You can take the advanced audit fees. You can take the progressive audit fees. That will not disqualify you. Say for example, today, that is 16th March, I'm asking the, 8 lakhs of my audit fees in advance. So that will be shown as an advance to the auditor. I will not be shown as a debtor for goods and services. Are you understanding the logic? If I'm using the goods and services, taking the goods and services of my client in the previous example, like I bought 8 air conditioners of 1 lakh each, it was indebtedness. But taking the advance audit fees, taking the progressive audit fees is not indebtedness. If you are taking your advance audit fees or audit fees in the progressive manner, that will not disqualify you. So I hope each and everything is crystal clear when it comes to this disqualification. Are you understanding the point? And this disqualification also will get attracted in the company, in its holding, in its subsidiary, in its associate, and another subsidiary of the common parent. Rest remaining for each and every topic, I have given the suitable examples. So you will be able to correlate after watching this video. When you will see these notes, you will be able to understand this example as well. Are you understanding what I'm saying? Yes or no? Yes. Now, what is the next example? The next disqualification is if you are indebted to or on the behalf of your client. If you are indebted to your client company or on the behalf of the client company for guarantees and securities, not for goods and services, now for guarantees and securities more than what? 1 lakh. So sir, how to remember GS, goods and services for more than 5 lakhs, guarantees and securities for more than 1 lakh. Now let's say for example, my client is ABC Limited. This ABC Limited went to the SBI for a loan of 1 crore rupees. SBI rejected the application. SBI is saying we need a guarantee. Now I am the auditor of my client ABC Limited and I am also a very good friend of SBI manager. My client knows this fact. So my client forced me to go to the SBI and give the guarantee on this 1 crore of loan. Now, when I'm giving the guarantee on this 1 crore of loan, what does that mean? We all know the contract of guarantee. I became a surety now. For my client, I gave the guarantee to the third party, that is SBI, on the behalf of my client. And what is the amount of guarantee? 1 crore. If my client will become defaulter, who will pay that money? I have to pay that money. It means I'm indirectly compromising my IOI, integrity, objectivity, and independence. That is what we don't want. So it means the moment this kind of situation is coming, you are immediately disqualified. And in case of securities and guarantee, limit is not more than 5 lakhs. It is more than 1 lakh. Now here I gave a guarantee to the third party on the behalf of my client. Now let's do another example. If my client is a finance company, and one of my close friend, Mr. Y, came to this company and wanted to take a 1 crore of loan. Now my client is asking Mr. Y, do you have any surety or not? Here, he's a very good friend of me. So he told me, why don't you give a guarantee on my behalf? I gave a guarantee. So when I gave a guarantee, what happened? I became indebted to my client now on the behalf of third party. So either you give a guarantee to the third party on the behalf of your client, or you give a guarantee to the client on the behalf of the third party. In both the cases, if the guarantees or securities are going to be more than what? 1 lakh rupees, you, your partner, your firm will be immediately disqualified. Are you getting the point or not? So I hope you understood the difference between the fifth disqualification and the fourth one. In the fourth one, it was a disqualification relating to goods and services, and the limit was more than 5 lakhs of indebtedness. And here, the indebtedness is for guarantees and securities, and the limit is more than 1 lakh. Clear, everyone? Now let's move to the sixth one. Very, very important. If you, your partner, are holding any kind of security. What do you mean by any kind of security? Equity, preference, debenture, bond, commercial paper deposit, any kind of security of any value, even a single rupee, in your client company and any of the company in its group, you, your firm and your partner will be immediately disqualified. It means you, your partner, your firm is not allowed to hold even a single rupee of security. That can be equity share capital, preference share capital in your client's company. The moment you will hold it, moment is the last moment, your firm will be immediately disqualified, not even a single second. So if your partner is holding any security of any value in the company means client company is holding company subsidiary, anywhere, you will be immediately disqualified. Yes or no? So immediate disqualification will take place. Not even a single moment will be taken. But, in case your relatives are holding, relatives, not relative, in case your relatives are holding any security up to rupees 1 lakh of face value, up to rupees 1 lakh of face value, then in that case you are not disqualified, nor your firm is disqualified, nor your partner is disqualified. So relatives के case में disqualification does not attract if your relatives are holding up to rupees 1 lakh of face value of the security. What is the major point? Face value of the security. Are you understanding what I'm saying? But if your relatives are holding more than what? 1 lakh, it means if it will cross 1 lakh 1 rupee, the moment it will become 1 lakh 1 rupee of face value, you, your partner and your firm will be immediately disqualified. No, disqualification will attract, but after 60 days. In your and your partner's case, में immediate disqualification if you are holding any security of any value. But in relatives case, if it is more than 1 lakh of face value, then also disqualification will come, but not immediate. You will be disqualified, your partner will be disqualified, the whole firm will be disqualified, but after 60 days. Now the question arises, sir, relatives ke case mein why it is 60 days given? It is given 60 days because you can take corrective measures to bring the level of your relatives' investment up to 1 lakh. Suppose your wife is holding or your husband is holding. You can tell them to bring it to the level of 1 lakh. 60 days time period the government has given to you. Otherwise, you will be immediately disqualified. On 61st day, if this still their holding is more than 1 lakh rupees, you, your partner, your firm will be disqualified. So what is the conclusion? In case of you or your partner holding any security of any value, immediate disqualification. But in relatives ke case mein up to 1 lakh of face value, no disqualification. But if it is breaching 1 lakh of face value, not immediate disqualification, but after 60 days. You have been given 60 days to take the corrective measures. Are you understanding what I'm saying? Yes. Now the biggest question arises, sir, who is a relative? That is the biggest problem. I will give you the solution within 1 minute. Now try to understand me. Little bit funny, but I think you will be able to enjoy it. Now, any co-partner of the HUF, any co-partner of your HUF family will be known as a relative. Any co-partner will be known as a what? Relative. But other than that, there are 14 persons you have to remember. Who is always here? Spouse. Who is always above you? Mother, father. Who are always parallel to you? Brother, sister. Who are below you? Son, daughter. Mother, father, brother, sister, son, daughter, your spouse. 6 people are over. Mother, father, brother, sister, son, daughter, spouse. 7 people are over. Stepmother, stepfather, stepbrother, stepsister, and stepson. 5 more added. 12 people are over. Are you understanding? Mother, father, brother, sister, son, daughter, stepmother, stepfather, stepbrother, stepsister, stepson, and spouse. Total 12 people are over. Son's wife and daughter's husband. Correct enough? So, spouse, mother, stepmother, brother, father, stepfather, brother, stepbrother, sister, stepsister, son, stepson, but no stepdaughter, only daughter, son's wife and daughter's husband. These are the 14 people will be covered in the definition of relative. So if my father-in-law is holding 2 lakhs worth of face value of securities in my client company, am I disqualified? Answer is no, because father-in-law is not covered in the definition of relative. But if my father is holding, yes, after 60 days, me, my partner and my firm will be immediately disqualified. Are you understanding what I'm saying? So this is the definition of relatives you should know. So 14 people are there, mother including stepmother, sister including stepsister, father including stepfather, brother including stepbrother. Don't get mistaken by the step spouse. Spouse is only one. Okay. So son including stepson, but there is no stepdaughter, only daughter. Son's wife and daughter's husband. So these are the people who come in the definition of relative under section 2 subsection 77 of the Companies Act 2013. So with that, your 6 disqualifications are over. Now the next disqualification is a very important disqualification under clause G, section 141 subsection 3 clause G, 7th disqualification. If you are breaching your ceiling limit of doing the company audits, if you are breaching the ceiling limit of doing the which audits? Company audits. Now the question arises, so what do you mean by ceiling limit? One practicing CA in one financial year cannot do more than 20 company audits. So this is a ceiling limit of company audits, not audits, company audits for a practicing chartered accountant in one financial year. It means I can do n number of partnership firm audits, I can do n number of society audits, trust audits, sole proprietorship audit, but when it comes to company, I cannot do more than 20 company audits. That is a single practicing CA's limit. But once we become a part of the firm, it turns into a limit of a firm, not the partner. Are you understanding the point? Say for example, in my firm, 3 partners are there. All 3 are practicing CAs. So it will be 20 plus 20 plus 20, 60 limit of the total firm. How much is the limit? 60 will be the limit of the total firm. Are you understanding what I'm saying? So see, ceiling limit of doing the company audit. It is for practicing chartered accountant per financial year. A practicing CA cannot perform more than 20 company audits in one financial year. But if you are doing the audit of OPC company, small company, dormant company and those private companies whose paid up share capital is less than 100 crores, they are not covered in the list of 20. They will not be counted. They will not affect your ceiling limit of 20. As many OPC companies audit you can do, as many small company audits you can do, as many dormant company audits you can do, as many private limited companies audit you can do whose paid up share capital is less than 100 crores. But make sure that that private limited company should not have defaulted in either filing the financial statement under section 137 or filing the annual returns under section 92 with the ROC. It means those private limited companies which are having a paid up share capital of greater than equals to 100 crores are covered and are going to affect your ceiling limit. So when the ceiling limit is not getting affected by the private companies, if the paid up share capital of such private limited company is less than what? 100 crores. And at the same time, they should not have defaulted in 92 and section number 137. You can see it over here. Yes or no? Yes. It means if you are doing the audit of the public companies, it will affect your ceiling limit. If you are doing the audit of private companies whose paid up share capital is greater than equals to 100 crores, it is going to affect your ceiling limit. If you are doing the audits of section 8 company, it will affect your ceiling limit. If you are doing the audit joint audits, it will affect your ceiling limit. If you are doing the government audits, that will affect your ceiling limit, government company audits. And if you are doing guarantee company having share capital audits, that also will affect your ceiling limits. So all these audit affects your ceiling limit, but these audits do not affect your ceiling limit. But remember, in the private limited company, you only and only have to catch paid up share capital, not the issued capital or subscribed capital. Are you understanding what I'm saying? So those private company whose paid up share capital is less than 100 crores, not less than, equals to, less than 100 crores, exactly 100 crores, equals to 100 crores, will affect your ceiling limit. Is it clear to all of you? Yes or no? Yes. Next one. If you are a partner in multiple firms, then put together your ceiling limit shall not be more than 20. Are you getting the point? Now in my firm, suppose 3 partners are there, A, B, C. All 3 are practicing CA. So what is the ceiling limit of the firm? It is 60. But in my firm, suppose A, B and C is there, but C or B is a non-practicing CA. Then in that case, my ceiling limit will be 40, because this ceiling limit is for a practicing chartered accountant. And remember, as per Income Tax Act 1961, your ceiling limit of tax audit is 60 per practicing CA. How many tax audits a single practicing CA can do? 60 tax audits. But ceiling limit of company audit is 20 tax audit. And remember one thing, if suppose, this is the example, A, B, C, D, E and Co, total 5 partners are there. It means how many company audits we can do? 100 company audits. A is in Goa, he is taking care of his holidays. B is in US, C is in Canada, and D is having a marriage. So no one is available in the office. Only E is available in the office. Only one partner is available in the office. Can he sign all the audit reports? Answer is yes. There is no harm when a single partner can sign all the 100 company audit reports. Sir, why sir? You told only 20 now. That is your individual ceiling limit. Now you are no more an individual. You are a part of the firm. And when you sign the audit report as a firm, appointment letter never comes in your name. Appointment letter comes in the name of firm. Whenever you sign it on the behalf of the firm. And firm limit is 100. You are just a signing authority. So yes, single CA, practicing CA, who is a partner of that firm, can sign all audit reports if the other auditors or the other partners are not available. The answer is yes. Same thing applies to the tax auditor also. So there is no harm if no one is available or only you are available. You can also sign the audit reports. Crystal clear? Yes or no? I hope everything is clear to all of you. So that brings an end to our 7th disqualification as well. So if you are breaching the more than 20 company audit ka ceiling limit, then you are disqualified. And do you remember that same disqualification ka declaration we are also giving while doing the appointment? Ki I am not breaching my ceiling limit. I am well within my ceiling limit. So one question below is given on the ceiling limit. Now you can see that what is this question? Now ABC and Co means 3 partners are there. 3 partner means how much is the company audit limit? 60 company audit limit. ABC and Co is already having 58 audits. What are those 58 audits? In this 58 audits, 29 are public company already, 8 are cost audit, 4 are private limited companies whose issued share capital, not paid up share capital, issued share capital is 400 crores each. 7 branch audits are there, 3 government company audits are there, 2 charitable trust audits are there, 3 foreign company audits are there, and 2 joint audits are there. Mr. A of ABC & Co is also running his sole proprietorship, A & Co, where he is doing 17 audits. Out of 17 audits, 4 are public company audit, 3 are religious society, 2 are guarantee company having share capital, 4 are branch audit, and 4 are what? Tax audits. Now listen to me very carefully. These are the companies which are waiting outside ABC & Co to be their auditor. Are you getting the point? Whether ABC & Co can accept all these audits or not. Now I'll tell you, when these kind of questions will come in the examination, how you have to do. So I think you all can see the question now. ABC & Co mein how many partners are there? 3 partners. It means 60 company audit is the ceiling limit. Am I correct? So we have to keep that in our mind. Now ABC & Co is already having 58 audits. Now in the 58 audits, 29 public companies are there. Yes, this will affect your ceiling limit. But 8 cost audits are there. Cost audit is not a company audit. Therefore, we have to concentrate on this list. What is this list? Public company, private company whose paid up share capital is greater than equals to 100 crore because less than is not covered under ceiling limit. Section 8 company, joint audits, government audit, government company audit, and guarantee company having share capital. All these are those things which affects your ceiling limit. Now let's come back to the question. Is it cost audit written over there? No. So 8 cost audit are not covered in your ceiling limit. So I'm going to take it as a 0. 4 private limited companies are there whose issued share capital is 400 crores each. Yes, sir, it is to be counted. But did I tell you the issued share capital or paid up share capital? Paid up share capital. It means these 4 private limited companies also I'm going to take it as 0. 7 branch audits also I'm going to take it as a 0. But 3 government company audits, yes, it affects my ceiling limit to 29 plus 3, 32. 2 charitable trust. Most of the students fall in this trap. They think that charitable trust is a Section 8 company. But who told you that it is a Section 8 company? It is not a Section 8 company. It's a charitable trust. So being a charitable trust, it is not a Section 8 company. It's a trust. If it is a charitable company written, I will consider it as a Section 8 company. So no, it will not affect my ceiling limit. I will take it as a 0. Now, 3 foreign companies. No, it does not affect my ceiling limit. I'll take it as a 0. 2 joint audits. Yes, it does affect my ceiling limit. So I will take it as a 2. So in total, 34 so far out of 58 are covered under my ceiling limit of company audit. But you know that Mr. A is also running its sole proprietorship where he is doing how many audits? 17 audits. Out of which 4 are public. Yes, his ceiling limit in his own firm also will be counted for ABC & Co. because he is a partner in ABC & Co. Therefore, 34 plus 4, 38. Sir, here 3 religious societies are there. Is it 3 religious company? If it is written company, I'll treat it as a Section 8. But it is written 3 religious society. So, bhaiya 0. Again 38 only total. 2 guarantee companies having share capital. Yes, it affects my ceiling limit as per the inclusion list which we have done above. So it is 40 now. 4 branch audit 0. Therefore it is still 40. 4 tax audit does not affect because we are talking about company audit ka ceiling limit, not tax audit. So it is still 40. It means ABC and Co put together with A and Co still has exhausted only 40 company audit ka ceiling limit. It means still they have 20 more to accept. They can accept 20 more because what is this firm having 3 practicing CAs? Now, these are the list of companies which are sitting in the office of ABC and Co to make their statutory auditor. So let's analyze this. MNO Limited, it's a private company or a public company? Sir, public company. Therefore, it will affect my ceiling limit. Yes, the 40 plus 1 makes it to 41. PQR Limited again is a public company. Yes, it will affect. It will become 42. I can accept it. RST Private Limited, whose paid up share capital is exactly 100 crores. Exactly 100 crores. Yes, it affects the ceiling limit. If it is less than 100 crores, no. So it means 42 became 43. 5 Section 8 companies audit came. Now it is not a trust or society. 5 Section 8 companies are there. The 43 plus 5 makes it to what? 48. 7 joint audits are there. Yes, I can accept 7 joint audits also. The 48 plus 5 makes it to 55. 1 UVR Limited is there. Again, public company. Yes, it is 56. Still 4 are there. 8 cinema hall audits are there. PVR cinemas. 18 branches of PVR Cinema Hall. Branches. It will be considered as 1. It might have been under 1, but branch audit is not covered. Therefore, 56 will remain 56. And 4 government company audits. Now it is 60. It means yes, ABC and Co can accept all these company audits. Are you understanding the ceiling limit ka relevance? So why I'm stressing more on ceiling limit? Because yes, you may get a separate question on that. Did you get the point? So with that, our 7 disqualifications are over. Now the next disqualification, 8th disqualification. You, your partner and your relative. Now relative word is added here. You your partner and relative should not be the director, should not be the KMP in the company. Here, no group testing will be done. We don't have to check this disqualification in the group, because in the group it is already being tested in the clause number 2. B clause mein, you or your partner should not be the officer or employee in the company. That has already been tested over there. But here relative is added, their relative was not there. It means you, your partner or your relative should not be the director or KMP position in the company. It means you are not allowed to be the employee, director, KMP. None of that is allowed. Your partner is also not allowed to be the director, KMP and employee. But relative के case में only director and KMP will disqualify you. It means relative can become what? Employee in your client company. Now, let's do this chart. Employee one side, director KMP one side. Now we are talking about you as an auditor. You are disqualified. You are disqualified. Your partner, you are disqualified if you are an employee. You are disqualified if you are director and KMP also. But your relative, if an employee, not disqualified, you are qualified. Because employee never participates in the decision making. That's why relative के case में director and KMP is only considered. Are you understanding? But if your relative is a director or KMP, then you are disqualified. But this also we have to check in the main company, not in the group of that. If your relative is a director or KMP, not in the company in which you are an auditor, it is director or KMP in the holding subsidiary, associate or another subsidiary, then also you are qualified. You are not disqualified. Director and KMP in case of relative should be only and only tested in case of the main company in which you are an auditor, not in the group company. But you and your partner ke case mein, it will be tested in everywhere, employment also and director and KMP position also. But relative ke case mein, employment is allowed, director and KMP is not allowed, that too in the main company not allowed. They are qualified. You are qualified if he is a director in case of holding subsidiary, associate and another subsidiary. I hope you all understood. Especially in this clause, we are not doing the group testing. Try to understand. You are disqualified. Your partner is disqualified. Relative is disqualified if you are holding director or KMP in the company. But relative can be an employee. Nowhere it is written employee. So yes, relative can be an employee. In that case, you are qualified. Because employee never participates in decision making, therefore you are qualified. But director and KMP participate, therefore you are disqualified. Did you get the point? Yes. Now, ninth is also a little bit different, because in the group we are going to add one more thing. You and your partner, and I would like to say relative also. You and your partner and relative should not establish any business relationship with the company. If you, your partner or your firm or your relative are establishing any business relationship with your client, and client means company, it's holding, subsidiary, associate, another associate. What is this? Subsidiary of an associate also added. What this is the extra point here. Subsidiary of an associate is also added. Now the biggest question arises, sir, business relationship means what? Business relationship means commercial relationship. It means if you are an auditor in a company and you are establishing a B2B relationship with your client, you are immediately disqualified. But B2C relationship mein you are qualified. So let me give you the example. I am the auditor of Airtel Limited, Bharti Airtel Limited. But I am also using the SIM of Airtel. I am using the SIM, telecommunication services of Airtel. Am I disqualified? Or my firm is disqualified? Or my partner is disqualified because we are using the Airtel communication network? Answer is no. Because I'm using the Airtel SIM as a customer. So it is a business to customer relationship. I'm qualified. This will not be termed as a business relationship. Are you understanding the point? But if I have my own company, I'm the auditor of Bharti Airtel Limited. I have my own company where I'm manufacturing the SIMs and I am delivering, I am supplying those SIMs to my client. Now in this case, you tell me it is a B2B relationship, therefore I am disqualified. I can stay in Taj Krishna, Taj Group of Hotels if I am the auditor of Taj Group of Hotels. As a customer, if I am staying, no problem. But if I am providing any business relationship with the Taj Krishna Group of Hotels, then in that case, I am immediately disqualified. So B2B mein you are disqualified, but B2C mein you are qualified. But what is the extra point we found here? We are going to test this business relationship not only in these 5 companies. Now, what is the extra point added in this 9th disqualification? That is subsidiary of an associate also will be tested here. Is it crystal clear to all? Yes or no? Yes. समझ में आया? Yes. Next. Your partner and firm, if committed an offense involving which a fraud crime. Which kind of crime? Fraud crime. If you, your partner or a firm committed an offense of fraud and you were convicted for such offense, convicted means sent to jail, and 10 years have not elapsed since such conviction, you are disqualified indirectly for 10 years. If you have been convicted for an offense relating to fraud, then in that case, you, your partner and your firm will be disqualified. Remember, when NCLT disqualifies you, when NCLT removes you before the expiry of the term, section number 140 subsection 5 in the previous video, he was disqualifying you for up to 5 years. But here court is involved. Who is involved? Court is involved. When NCLT gets involved, disqualification of maximum 5 years. But when the court is involved, minimum disqualification of 10 years. If it was committed an offense of a fraud kind of nature and you were convicted for that. If you, your partner or firm committed an offense involving fraud and convicted, and 10 years have not elapsed since such conviction, then you are disqualified for 10 years because whose order it is? Court order. So remember, NCLT under section 140 subsection 5, when it is removing you before the expiry of the term, there the disqualification, there also fraud is involved. But there the disqualification is up to maximum 5 years. Here, NCLT is not removing you, court removing you. The court order will be valid for 10 years. It means you have to wait for 10 years to again come into the market and do the practice again. So suppose in 2008, Mr. A, say for example, Mr. A, the auditor of Satyam scam, the one who was involved in Satyam scam, Mr. A, he was jailed for 9 years. It means he will come out of the jail in 2017. How many years he served in jail? 9 years. But what is the total disqualification? 10 years. It means even in 2017, even though he came out of the jail, he is still what? Disqualified. He will become qualified only from 2018 onwards. 10 years must elapse. And suppose Mr. A of Satyam scam was jailed for 12 years. But sir, you to say 10 years now. Jailed for 12 years, it can be jailed. Okay, sir. So means 2018 mein this Mr. A will be qualified again? No, he's still in jail. What is his jail term? 12 years. When did he go to the jail? 2008. It means when he'll come out of the jail? 2020. So after coming out of the jail, now he'll be qualified. But sir, you to say 10 years, so it means you will get your audit report signed in the jail. Will you go to the jail? Number 123, Caddy number 420, sir, please sign the audit report like that. No. 10 years of disqualification or service of imprisonment, whichever is later. Minimum 10 years, maximum service of imprisonment. After that only you will be again qualified to do your practice. Is it crystal clear? Yes. And 11th and the most important disqualification, that is called, if you are a statutory auditor of a company. If you are a statutory auditor of the company, you are not allowed, you are prohibited. You are not allowed, you are prohibited under section 144 to provide any of these services. If you found guilty of providing any of these services under section 144, 144 talks about prohibited services, which you are not allowed to provide if you are an statutory auditor of a company. So along with being a statutory auditor, you are not allowed to provide internal audit. So statutory auditor cannot be the internal audit, cannot be the cost auditor, cannot provide actuarial sciences services, cannot provide investment banking, investment advisory, management consultancy services, agency functions, cannot be involved in the bookkeeping system, cannot be involved in the accounting system, cannot be involved in the financial information system, cannot be providing portfolio management services, and cannot be providing underwriting agreement services. If any of these services you are guilty of being provided under section 144, being the statutory auditor, along with being the statutory auditor, if you are guilty of providing these services, you are immediately disqualified, vacate the office, and 139 subsection 8 will take place. अगर गवर्नमेंट कंपनी है तो let it be any reason याद है, and if it's a non-government company, reason is other than resignation. With that, our section number 141 is already over. So 141 mein what we did, everyone, very important section. What we have learned, almost it took 1 year to revise, 1 hour, sorry, not year, to revise this complete section. The 141 subsection 1, subsection 2, which talks about qualification, and 141 subsection 3, which talks about disqualifications. Is it crystal clear to all of you? Yes. So I hope this video will help you out in doing the revision of this particular section also. So I'll see you in the next video with the section number 142 to section number 148, because I think the majority of the sections which we are left with another 2 hours of session, so we need to revise those sections. So maybe from 142 to section number 148 we'll be able to revise it in the next 2 hours sessions, because I'm keeping these videos very short so that it will be easy for you to revise it. So 1 hour video each I'm trying to make it. So 142 to 147 we'll do it in the next session, and in the next session we'll dedicate 148 and 143 के some parts, except 143 subsection 11. Everything I'm going to revise here, because 143 subsection 11 talks about CARO 2020. That will be our after professional ethics when we'll do the 700 series. So that time I will make you revise in the audit report chapter. Okay, so audit reporting mein CARO 2020 also will understand. We'll revise it. We'll have a dedicated session on CARO. Along with that, 700 series also will wind up. But after this company audit, after the books of accounts, and after the dividend, I would like you to take you towards the revision of professional ethics. The professional ethics, these 3 chapters, books of accounts, company audit, dividend, and audit reporting put together is going to fetch you 40 marks in the examination. Minimum 40 marks of revision will be over. After that, we'll take the other separate chapters like audit committee, corporate governance, due diligence, forensic, and whatever the sequence we will be into. Peer review, quality review, PSU audit, and you can see internal audit, management audit, audit of banks, insurance, and BFC. So one by one, we'll keep on. And maybe in future, the videos you will be finding that will be more than 1 hour also, because there are some topics which you cannot leave in between. These are section based. So yes, we can do the revision as per the particular section. But yes, if you are still thinking that it is taking a lot of time for you to revise, do play this video at 1.5x speed if you want to revise it in half of the time. Are you getting the point? So thank you so much everyone for lending your patient ears. I'll again borrow it in the next video. Bye bye everyone. Take care.